Welcome to this evening's Family Support Center of New Jersey's webinar titled Social Security Work Incentives, a Blueprint for Success, part of the Transition webinar series. I would like to start by introducing tonight's presenter, Greg Makeley. Greg has served people with disabilities in various capacities since 1986. He is currently the Director of Employment Services for the Family Resource Network, overseeing the New Jersey Work Incentives Network Support, also known as NJ WINS, Getting to Work, and Wireless Work programs. NJ WINS assists SSI and SSDI beneficiaries to utilize available work incentives while attempting to start, continue, or augment work. These work incentives allow a beneficiary to keep his or hers benefits for as long as they are needed. Getting to Work provides employment supports and services to people with any type of disability. Employment support services involve assistance to prepare for, find, and retain work. In addition, Wireless Work is a new program which assists those with mobility disabilities to establish virtual networks in order to conduct job search, increase skill level, and further their careers. Please welcome Greg Makeley. Greg, I'm giving control of the screen over to you.
Oh, yeah, sorry. Do I have it?
You should.
Show my screen. Here we go. Okay. So tonight what we're going to do is go over SSI, work incentives. Then we're going to go through New Jersey WorkAbility Medicaid. And then we're going to go through SSDI work incentives, and if we have time, we'll go through some of the ticket to work protections and how they all work. Okay, so we're going to have some questions, opportunity for questions at the end of my presentation of WorkAbility Medicaid. And then we'll have another set time for questions at the end of SSDI and Ticket to Work. Okay, so we're going to start off. What I usually do is start off with the definition of disability according to the Social Security Administration. I usually go over that first because it's kind of critical. It's the first thing that you encounter when you're applying for benefits. This is the definition that they use to get you onto benefits. It is you should be unable to work and make SGA, substantial gainful activity. You'll hear that phrase, term again in a little bit when we talk about SSDI. And substantial gainful activity is this year $1,070 gross a month, $1,070 gross a month. And if you cannot make that amount of money because of your disability for 12 months or more, then you can get onto your, that's how you get on your benefit. Now, the other reason that I use that definition is because if you haven't aged into this definition and you begin to work and you never really, you hit that SGA figure before you satisfy the definition, then you can become ineligible for your benefit and also for the work incentives that I'm about to describe. So it's critical for that reason. And the third reason that I use this is because this is the definition they're going to return to if they're doing a continuing disability review. A continuing disability review is basically a medical review that they do every 3 to 5 or 5 to 7 years, depending upon your disability category, whenever they revisit that to make sure that that's still true. You may not be making SGA, you just want to make sure that the reason for that is still because of your disability, not because you're deciding you don't want to lose your check or you don't want to lose your medical coverage. So those are the reasons. There's actually another reason, and that concerns the requirements for WorkAbility Medicaid. So I will revisit this definition when we get to WorkAbility as well. Okay. Now, the second thing I usually do is to talk about the fact that the payee or the representative payee, and if you're a parent, you're probably the representative payee for your child. Even if they're adults, you can be a representative payee, and either the payee or the representative payee is responsible to report to the Social Security Administration any information they need to know. If we're talking about SSI, we're talking about living arrangements, we're talking about unearned income, resources, and earned income. If we're talking about SSDI, we're only talking about earnings. Okay, now the best way to report is to do that in person if you can afford the time to do it. You can call and make an appointment. You will never be able to call and make an appointment with a specific individual, but they're just going to give you a time and a day to be there, and whoever's free at that time is going to get you. So you can do that, but other than that, you would pick a number and wait for them to call you as if you were at a meat counter. When you see that individual, you're going to give them only copies of your information. You should keep all the originals yourself. Never throw away the copies. I mean, never throw away those originals. Always keep them. And when you're through working with the individual that sees you, you should get a receipt for having been there that day, reporting that information. That is your only proof that you've done that. Now, Social Security might tell you that you can call the information, and I'll tell you never to call them for that, to report information, and not even for information. They don't have, their information line people don't have enough time to really give you a truly accurate answer. It takes us about an hour on the phone with somebody or in person with somebody to get enough information to even begin to give you an accurate answer. So, and they're not going to have that kind of time to do that. So their information line, probably you should call us instead. And if you're reporting information, the best that can happen in a situation like that is they're going to log it in only as an estimate, and you'll still have to give it to them in black and white, so it's kind of useless. And you won't have any proof that you made that call. And if there's a mistake, you can end up being responsible for the mistake, even if you've given them the information, if you can't prove you did that. So that receipt that you get is usually a stamp on your copy of the information with the date, time, and the person that you met with. And that is proof positive that you did that. Now, if you can't do that, the only other way to report your information is through certified mail. At least you'll have that green receipt, but of course you can put anything in an envelope, so it's not proof definitive. Okay, so they will be expecting the payee or the representative payee to do the reporting. The only other way they'll get, for instance, earnings information is by the IRS, red flagging an account, and that happens every 2 years, and that's not a good way for them to find out. They'll think you're trying to hide the information from them, and they will be a little more difficult to deal with at that point. So you're going to need to be the one who reports one way or the other. Now, first benefit I'm going to go through is SSI, Supplemental Security Income is what SSI is, and it's named aptly. It is an income supplement, so before they supplement or add to your income, they're going to need to know what you have already, and they're going to need to know what's coming in the door that month. Okay, you can be aged or disabled and be receiving this benefit. You can be a child and receiving this benefit if your parents' income is low enough. So in the case of children, they're going to do a parent-to-child deeming formula, which we will not be going over tonight. Once a child turns 18, they can get SSI on their own as an adult. And that might be true for someone who doesn't have SSI as a child just because the parent's income is too much for them to be able to be eligible for it. Once they become adults, they can apply again, and they're almost guaranteed that they'll end up with that. They may not end up with the full benefit, but they might end up with a third reduced benefit, and I'll describe what that is in a little bit. Okay, so you don't have to have a work history to have SSI. You can be a child and be receiving SSI, and so the first thing that they're going to look at is money you already have, and this is what they're going to call resources. So it's anything that you have in checking or savings that month, or any possessions that you can turn into money that month, liquid assets, bank stocks, property. The only thing that there won't count in terms of property would be property essential to self-support, and that is basically a primary residence, so you can actually own a home and be an SSI recipient, and also a primary vehicle. Now, the reason they're going to allow these options for you is because they know you need to live somewhere before you can work, and they know you need a way to get to work. Okay, so they want to incentivize work. They're not going to penalize you for those two items. However, everything else they're going to put into that. So if you have a secondary vehicle or a motorcycle or something, they're going to count the value of that, or secondary home, obviously, they'll count the value of that in the resource total. The resource total is $2,000 for single individuals and $3,000 for eligible couples. What they mean by eligible couples is married couple receiving SSI as two disabled individuals. Okay? So now, what happens if you go over that $2,000 or $3,000 resource limit? It's critical when you go over that, even if you're $1 over that, you are actually ineligible for both your entire SSI check, and Medicaid comes with SSI, so you're also ineligible for your Medicaid for that month and for however many months that exists, that money in your account. So if you spend it down before the first of the next month, then you can become eligible again. If you have that money for 12 or more months, then you have come off your entire benefit, both your SSI and Medicaid, and you'd have to reapply to get that back again. The only other way other than spending that money down, literally, the only other way to discount that figure is by opening up a pass plan, which we will get to later in this particular SSI piece. Okay? Now, your SSI check comes to you from two different pots. The largest pot is the federal portion, and that for 2014 is $721. And that other third reduced figure there, I'll explain in a minute, but that's also a federal figure, and that goes to people who are receiving some kind of in-kind support, and I'll explain that, in-kind support, and I'll explain that in a minute. So the other portion comes from the state of New Jersey. Not every state contributes a state portion. For instance, Tennessee doesn't have any state portion. You can only get 720 or 480 from the federal government, and the Tennessee won't kick in anything. Some states contribute more to the checks, and some states less than New Jersey. The state portions for New Jersey don't really change. However, the federal portion is what changes every year when your check increases with the cost of living. That's what happens. It'll it'll change the amount of that you're receiving. Okay. Now, the state portion, as I mentioned, is dictated by living arrangements. There are all of these living arrangements, which we are not going to go through all of them today. So relax a little bit about that. I am going to go through the living alone or with others section and the living in the household of another. And those two are the most used categories, the most common. The living alone or with others, by that, Social Security means you are someone who is either living in a household but taking care of your own household, your own food, clothing, and shelter, and contributing equally to household expenses, or so you could be living at home, or you could be living with friends, but you're the one that's taking care of all of your expenses. In the living in the household of another category, someone will be put in that category if they are unable to contribute equally to household expenses. Now, it doesn't make sense that they're going to have that category. It doesn't make sense, because if you could do that, if you could contribute equally to household expenses, you wouldn't need an SSI check. So it doesn't quite make sense that way. And then they go further in not quite making sense by the federal government decreasing their contribution to the SSI check by a third. Okay, so that's the figure that we just showed you, 480.67. Now, the state of New Jersey will kick in $44.31 instead of $31.25. So the state understands a little bit more, but they don't understand enough to make it to make up the entire difference. So you're going to get a smaller check by the time you're through if you're a third reduced beneficiary. If you were a child who who has become 18, the way they're going to be counting, they will say, look, we're not going to count the parent's income at that point. However, they are kind of, because they're going to see the parents as in-kind support if the child is not contributing equally to household expenses. Now, the truth of the matter is, no matter how well you know all of these regulations, you're still going to be dealing with the human beings who apply them at the Social Security office. So you might find John, who lives at home with mom and dad, and he's getting a full benefit. You might find Mary, who's living at home with mom and dad, and she's got only a third reduced benefit. The only reason for that is that one claims rep made one decision because they thought, oh, gee, that's not a sensible regulation. We're going to cut them a break on that. And the other one went by the book and applied that particular living arrangement category and gave that person a third reduced benefit. Okay, so at the start, they're starting with less money. Now, there are two ways to move from living in alone or with other, from living in the household of another category to the living alone or with others category. One of them is by simply moving out of the house on your own. You notify Social Security and bang, your check goes up. The other would be by using a rumor lodger affidavit, and that's basically stating that you're now a renter in that particular household. Now, that will change mom and dad's tax situation, so they might not want to go that route. Having said all of that, the most important part of the benefit, of the SSI benefit, is really not the check. It's actually the Medicaid that comes with it. Okay, that's the most valuable portion of an SSI benefit. Okay, the next money category, so we talked about resources, we talked about what the SSI check is made up of. Now we're going to go into what money comes in the door that month, and the first portion of that money is going to be unearned income, and for that, by that they mean anything you don't work to get. So it could be a settlement from a lawsuit. It could be dividends that are coming in that month. It could be anything that you don't work to get. What they're going to do in that case is they're going to count all but $20 of that money. Okay, so if you have, for instance, an SSDI check, and it is possible to have both SSI and SSDI, they're going to count all but $20 of that SSDI check. And if that's a $500 check, that means that they're going to subtract $480 from whatever your starting benefit was. So if you had the full benefit, which is now $751.25, that would be your $721 and the state supplement of $31.25. They're going to subtract that $480 from that check. And here's an example of what you're going to have to start with if you are someone who is on that particular in that particular situation. Now, if it is an SSDI check that we're talking about, the Social Security Administration will take care of that before you get the check. So you're never really going to get your full benefit check. You're going to end up just getting a reduced check to begin with. So you'll never see that. Okay? So that's how they deal with unearned income. The only way to discount unearned income is either to not have it coming in or to have a past plan. That's another way to discount some of that figure, and as I mentioned, we will get to past plans. Now, The next money category that we're going to go through, and I don't know why this is not moving. Here we go. Is called earned income, and earned income is anything you work to get, obviously. They're going to count it as an SSI recipient. You're going to be counting it differently than an SSDI recipient and count it as, with their very little rule with SSI. And so they want to know what you have to deal with to meet your monthly living expenses. So they're going to want to know when you got paid. So if you're an SSI recipient and you're looking at that your pay stub, you're going to be looking at the actual pay dates and adding those up for the month. That is going to be, and you're going to look at the gross totals. So before taxes are taken out, you add those up for the month, and that's what they're going to start with. And they're going to use Law Provision 6019A, which established that you can keep a portion of your SSI check when you go to work. The more money you make, the less your check is. And this is how it's going to be. They're going to use an income test formula that they established for this. And so if I'm working very little, I'm working part-time, and I'm making $400 worth of gross earnings, they're going to, and I don't have any, if I don't have any unearned income, they're going to allow me to take that general income exclusion that they would have taken out of the unearned income away from the earnings. Okay, so they're going to allow you to subtract that $20. Then they're going to allow you an additional $65 earned income exclusion. So if anybody's wondering, gee, how long before my SSI check is affected? Whenever you're making more than $85. Okay? Now, in addition to subtracting that $85, they're going to allow you to divide the remaining figure in half. So you divide it by 2. And so if I'm working and making $400 in gross earnings, they're only going to be counting $157.50 of that money. Now, that countable figure, that countable earnings figure, is going to be subtracted from whatever your check is. Here I divided it up by the federal rate, so you subtract out the $157.50, and then you add in the $31.25. The remaining check, which started out at $751.25, is now down to $594.75. Now, you're going to say, look, as a parent, you're going to say, well, why would I want my son or daughter to be going to work? Or maybe your son or daughter would say that. Now, the obvious answer is the total gross income is always going to be more than your maximum check. In this case, $994.75. Even if you took taxes out, it's going to be more than that $751.25 check that you started out with. So if you forget everything else that I talked about in terms of SSI, remember this: it's always better for somebody on SSI to at least be doing a little bit of work. It's even better if you can do enough work to lose your entire SSI check, and I'll explain what I mean by that. Okay, if you have both unearned income and earned income, they're going to treat them both separately. They will not allow you to divide the unearned income in half. So they're going to treat those, they're just going to allow you to subtract the 20, and then you would only be subtracting 65 from the earnings piece, and then dividing the remaining piece in half. Okay, so if you've ever heard $1 for every 2, that's where they're getting it from, this particular formula. Okay, the next piece that I'm going to go over, and this is the same formula for people who have a third reduced benefit. It's just you just start out with a different amount. Now, perhaps the best work incentive that you can ever encounter is called a student earned income exclusion. These index up each year, these particular exclusions. They are for people who are full-time in school, under the age of 22, and not married or the head of their own household. Okay, you can exclude up to $1,750. That's this year's figure. It says 2013, but that's a 2014 figure. And so you can exclude up to that each month in earnings, so that you won't have to put that in that particular formula that I just showed you. This money will not be counted because of this exclusion. So up to that can be excluded by the month. Now, you'll notice that Annually, they will only allow you to exclude $760 for the year, so $7,660 for the year. Now, if you do math in your head, you know that's not 12 months worth. So then that is because they do mean that you're working part-time. You are a full-time student and you're either working at night, on the weekends, or during the summertime. Okay. Now, most of the time, a student isn't going to exceed that 7,060 figure when they're just working part-time. So most of the time, a student is going to be able to receive their entire SSI check and their earnings without having anything taken out of their SSI check. Okay. The next piece is a next work incentive that we're going to talk about is called an impairment-related work expense. Now, for people who are in SSI, your impairment-related work expenses, you're going to see half the value of that, and I'll show you how that works in a minute in the formula. Now, impairment-related work expenses basically are exactly what they say they are. They are any out-of-pocket expenses that the beneficiary incurs because of their disability in order to go to work. So it has to be both work-related and disability-related. It can't be something like a uniform that everybody else at your place of work needs. So that's not disability-related. Let me give you an example. I was working with someone who was taking a taxi to work. Now, taxis are not necessarily disability-related, but in this person's case, if she waited in extreme temperature changes, she had a physical condition where that would exacerbate to a point where her life would be threatened. So she had that kind of a condition, so she could not wait on the street corner for a bus or take a train and wait for that because she might put herself in a life-threatening situation. That meant that was a transportation early, so she was paying $200 a month for that. If she were an SSI recipient, let me show you where she would take that cost out. In addition to the $85, she would be allowed to subtract the $200. Now, there is an exhaustive point for impairment-related work expenses. They're not going to give you more than the maximum check, that $751.25 that you would have gotten. So there is a point at which, it's an exhaustive figure. So you will get half the value most of the time reflected back in your check. So if she had that $200 expense, it would mean that her check would go back up by $100. Now, it's different for people with SSDI, and when we get to the SSDI, I'll show you how an impairment-related work expense is used for SSDI recipients. Now, there are 10 different categories of impairment-related work expenses. They're listed and categorized in the center of the SSIA Red Book. If you go to the njwins.org website, you will be able to find that center lifted out for you. The SSA Red Book is a little bit confusing to read, which is why I lifted out these 10 categories. And I have a document there that will show you exactly what they do and don't mean by each of these 10 categories that you have before you. I won't read through them, but you can see them there. And they do describe them in the document that I have posted on NJ Wins. And in the center of the SSA Red Book, it's pages 28 through 33, I believe, in the Red Book. So these are the categories. And the rule for this is kind of the spaghetti principle. Throw it up on the wall. If it sticks, it's yours. And if it doesn't work, no harm done. You should always at least try. If you think you have an impairment-related work expense, it's always best to try to see if they'll go for that. So I've seen things that shouldn't be called impairment-related work expenses called accepted, and then I've seen the opposite, that you'd actually have to fight for, so that things that should be accepted. So if you think you might have one of these situations that fit one of those definitions, then you should go ahead and try to have it applied. It's going to allow for a little bit larger check. Okay. If any of you have children who fit this definition of blindness, which is 2200 or less in the better eye, and a field of vision of less than 20 degrees. That's the SSA definition of blindness. They can use what is known as blind work expenses. Okay, there are 4 more categories. Some of them are fairly liberal. You can actually take taxes out. You can go on the net if you're someone who is blind. Meals consumed during work. They have some interesting categories, and that's because the lobby for the blind in Washington is fairly large and powerful. Lawyers have tried to get this to be true for every disability category, but the law judge said, look, we can leave it the way it is, or we can bring blind folks back down to what everybody else has to deal with. So they didn't want to change that. So this is unlikely to change. Those who are blind will have extra categories. And not only that, but if you go back in this formula, instead of taking this out before you do the division, you get to take a blind work expense out after the division occurs, which means you get dollar for dollar value out of that particular discount. Okay? So it is a very worthwhile discount, but you can only use it for SSI people. SSDI can't, you can't use it towards an SSDI account because there is also a blind SGA, which we'll get to when we get to SSDI. Now, I promised you that I would talk about what is a PASS plan, Plan for Achieving Self-Support. Now, the name for this is the first name that they use that doesn't quite ring true, because you do not have to be entirely self-supporting by the time you are finished with your Plan for Achieving Self-Support. You can even have an employment goal that is a supported employment, so you don't even need to be independent in terms of your employment. What they want to see is that you're making progress towards some employment goal. Okay, they will be looking for a feasible occupational goal. You can't tell them that you're going to be a rocket scientist and you didn't graduate high school. They're not going to go for that. You're going to have to show, have a goal that they think you're going to be able to achieve. It's going to involve a savings and spending plan. You're going to have to tell them what the cost of the items and services that you want are, what account you're going to put the money in to save it, what money you're going to put in there, how often you're going to put it in there, when you're going to take it out to spend it on the items, and when this plan is all going to be through. So it's got to have a strict timetable. And that particular timetable is rock solid once things are decided. Past plans are not decided by at the local Social Security office. They are decided at the regional office level, and they're decided by what they call PASS cadres. There are only 2 PASS cadres for the entire New York, New Jersey, the Virgin Islands, and Puerto Rico region. There's only one of those particular cadres covers the entire state of New Jersey. So, and that person is located in the New York regional office. So they're in the city. And so that person has a lot to do. They were originally supposed to help step-by-step work with people to get them through these, but they just don't have the time to do that. So fortunately, you have community work incentives coordinators with my program, NJ WINS, which is the federal WIPA program, Work Incentives Planning and Assistance Program, as it exists in the state of New Jersey. We receive Social Security dollars and New Jersey Division of Voc Rehab dollars to do what we do. And so you can send your son or daughter or whoever you're working with, if you're another professional working with another population, whatever beneficiary to us, even if they're just thinking about going to work, even before they start work. If they're already working, they should be sent to us so that we can help you, help them to be able to get the most out of their benefit as they go to work. So back to, so a plan for achieving self-support, they average around 3 years. They understand, the whole basis of it was that Social Security understood that they told you you cannot have more than $2,000 in the bank. That makes it hard to buy a reliable car these days. It also makes it hard to pay for even a semester of college. So they understand, and they want to incentivize going to work. They want to incentivize you having a way to get to work and the training to get a decent job and get off benefits. So they wanted to make a way for that to happen. And that way is your PASS plan. So if you needed to save up for something, a big ticket item, this is what you would use, because whatever you put in the PASS plan, they're not going to count. Now, you can put all three money categories into a PASS plan. You can put resource money in if you think you're going to be going over resource. You can put unearned income in, and you could put earned income in. Now, the trick is this. The crucial part of this whole plan is you have to show Social Security that you can live on whatever money you're not putting into this plan, because they're not going to allow you to say, oh, yeah, I have that SSDI check coming in, but I'm going to put it all into the PASS account, so don't bother counting that. Meanwhile, you're going out to movies or paying even for your food, clothing, and shelter out of that or whatever. They're not going to allow that to happen. So they're going to force you to show them what your monthly expenses are and how you're going to meet them without the money you're putting into the PASS plan. If at any point you do, as someone did in upstate New York, he had saved up to $4,000 to go to school, and then all of a sudden he decided he needed new living room furniture and carpeting, and that ended up being a huge overpayment that he had to pay back. So they will be coming to get the money back if you don't use the money that you put into the PASS plan for what you told them that you were going to use it for. The other critical piece is once they approve a plan, and these plans are 14 pages long, once they approve them, the timetable that you had specified in the plan is rock solid. So if I'm someone who has a mental health condition and I'm going to school, I'm paying for school, my plan is working, but then I have a hospitalization and I'm no longer able to go to school, I'm no longer able to stay with my timetable, I would have to write an entire new PASS plan and get it reapproved before I could continue. Okay, so you cannot assume that they're going to morph or change that particular PASS plan just whenever your timetable happens to change. You have to submit a new PASS plan for that. Okay, so again, you can put all three money categories in there. Whatever you put in there is not going to count where they are. So you're not going to have, if you have earnings that you're putting in there, they're not going to enter that earnings form. If you have unearned income, it's not going to be counted, whatever that. And if you have resource money, you know, it's a way to stay under resources. You can also, I mean, you can start businesses. So you can become self-employed. If you were, for instance, going to get a $10,000 startup cost from the state of New Jersey, VR, to start your own business, you would need a way to cover that so it's not counted against that $2,000 resource limit. A PASS plan would be a way to do that. Okay? These are the PASS cadres. I've highlighted the New Jersey numbers. It used to be, I don't know if it still is, but if you call the person at extension 5, you get the person at extension 8 and vice versa. I don't know why they do that. They like to be a little bit different. All right, so these are additional income exclusions. They're not supposed to count small gifts or infrequent gifts. Not supposed to be counting your SNAP benefits or whatever. These are your past federal benefit rates. They do index up each year. There were several years where it didn't index up, and that was in the middle of the financial crisis. It's back to indexing up each year. It is 721 this year, and again, that's only the federal portion. You see the couples rate there. Now, the couples rate is not double the singles rate. So you have to understand, if your son or daughter or the people that you're working with, they want to get married, they're going to end up, their monthly income is going to go down. So you can do what you want with that. I'm not going to tell you not to, you know, to discourage people from getting married, just to let them know they're going to have less money to deal with in terms of SSI. Now, one of your questions would be, when would I be making so much money that I would lose my entire SSI check? And there is a way to calculate that. That is basically reversing the formula that I just gave you. So instead of subtracting that $85 and dividing, you're going to reverse that. You're going to start out by multiplying whatever your present check is. You can put any amount in that top box by 2, and then add in 85. If you're only dealing with if you're dealing with unearned income as well, just add in 65, and you'll come up with whatever it is that you're going to break even at. Now, down on the bottom, you'll see that if you're getting a full SSI check, not a third reduced one, you'd have to be making $1589.50 to lose your entire SSI check. That's a lot more than that $752 figure that you're getting in your SSI check. So you're going to be in good shape in terms of that. Now, if you do happen to make enough money to pass this break-even point and not be eligible for an SSI check, you are moving to Law Provision 1619B. And Law Provision 1619B basically states that, look, if you lose your SSI check because of earned income, then you get to keep your SSI Medicaid. Now, there are 2 loopholes that I'm going to go through, but most of the time it has to be because of earned income. That has to be what knocked out your SSI check. If unearned income if it's your own SSDI check that knocks you out, then you would lose everything, your Medicaid as well. However, if it's one of the loopholes is an SSDI benefit derived from a deceased or disabled parent's account. It's called a DAC benefit, a disabled adult child benefit. If that's the kind of unearned income that knocks the check out, you can loophole into keeping your Medicaid through 1619B. The other loophole is if it was my own SSDI that knocked out my check, but it didn't knock it out until years of COLA increases, I could keep my Medicaid through the Pickle Amendment. And the Pickle Amendment is basically an amendment that was authored by Congressman A.J. Pickle, and that states that if you have a COLA increase, that you can have, and that's what knocked out your SSI, you can keep your Medicaid. Now, if you're wondering, gee, if I get to a point where I've earned enough money to lose my entire check, can I ever get my check back? And the answer is yes, as long as there haven't been 12 months between the time that you lost your check because of earning and regaining your check. Okay, you could also get it back by reapplying if you really wanted to. But again, the check is not the most important piece of your SSI benefit. The Medicaid benefit is. Now, they're not going to allow you to earn any kind of money that you want. They're also going to keep you locked into that $2,000 resource limit. So if your son or daughter or the person you're working with is going to go to work and then start putting money in the bank and they get happy and you're going to go past that $2,000 resource limit, they're going to lose their Medicaid even though if they're 1619B. That does have a resource limit attached to it, and that's that same $2,000. Now, if they're earning and they start to really earn decent money, they're only allowed to earn up to $34,405 for the year in 2014. This is another figure that indexes up each year with the cost of living. So if you stay at or below this figure, you're able to keep your Medicaid through the 1619B Medicaid program in the state of New Jersey. This figure is not only specific to 2014, it's specific to the state of New Jersey. Every state has a different figure for the 1619B earnings threshold. So if you move to Pennsylvania or whatever, you'll have to look up what that is or look up your WIPA program. They can help you with it. Okay? So if you can keep your Medicaid if you're earning at or below this, you stay under $2,000 in resources. Now, what if you want to exceed this in earned income, or if you wanted to save more than $2,000 in the bank or whatever? You can do that through a program called New Jersey WorkAbility Medicaid. Now, New Jersey WorkAbility Medicaid started as the Medicaid buy-in program, the federal Medicaid buy-in program, as it exists in the state of New Jersey. Every state was allowed to apply it whatever way they wanted to. New Jersey happened to construct it. A man named Bill Ditta was the one who authored it in New Jersey, and did it so well that from the start it was the best Medicaid buy-in program in the country, actually, so you're fortunate. If you apply for WorkAbility, you can make up to, this is last year's figures, the 2014 amounts. I checked on it yesterday. They still have not come out. I have not heard anything. They're supposed to come out soon. Sometimes they come out as late as March. Usually they come out sometime in February, so they're due to come out. They're only going to increase, and the old figures are $58,236 in earnings for the year. You can see that's a lot more than SGA, which is $1,070 gross a month, and for couples $78,348 for the year. Now you'll notice that they have an unearned income cap of $958 for single individuals and $1,295 for couples. They will not count your own SSDI against you, but they will count SSDI derived from a deceased or disabled parent's account, a DAC benefit. So that I want to point out, because sometimes a DAC beneficiary, if they get money from a deceased or disabled parent's account and it knocks out SSI, a mistake is made and the Medicaid is not continued. That happens quite frequently, and it is a mistake. All you have to do to overturn that mistake is go down to your local county board of social service office and say, look, at one point I was an SSI recipient and I had a DAC benefit come in and knock my check out. Now you should reinstate my Medicaid, and they will do that, and they should do that, and we can help you with that at New Jersey Wins. So that you're going to want to make sure happens, because if you're subject to that $958 a month unearned income cap, and you know you got $1,000 coming in from your mom or dad's DAC benefit, that you're not going to become eligible for this WorkAbility Medicaid through WorkAbility. Okay, so you're going to want to make sure that that worked out, and again, you're going to have to correct that by going down to your local county board or social service office. Now, these are the eligibility criteria for that. They will allow you up to $20,000 in resources, so you can save quite a bit of money as a person receiving WorkAbility Medicaid, and $30,000 as a couple. So it gives you a little bit more leeway. The only other requirement is you have to be working. Now, the other one little caveat I wanted to point out is that if I don't have, say I'm applying for WorkAbility, but I don't have an SSDI, I'm not an SSDI recipient. When you go down to your county board of social service office, which is where you're going to be applying for this benefit, they are going to be asking you, are you an SSDI beneficiary? And if the answer is no, what they should say is, well, prove to us that you're ineligible, that you tried and because of earnings that you're unable to satisfy the definition of disability according to Social Security. Now, if you can prove that, then they should send you for a strictly medical determination. The Division of the Disability Determination Service should get your case and decide whether you meet the SSA Blue Book medical definition of disability. They're going to throw out the earnings piece, because the earnings piece, as we said, you can't be making at or above SGA, which is $1,070. You'll notice that this benefit you can make 4 times that, basically. So they should be going by a different definition, and that definition is the Blue Book half of the SSA definition. It is an SSA definition, but it's only half of it. They're only using the medical determination. So and they mess this up all the time at the County Board of Social Service office. If you have difficulty, we can help you to overturn that. Okay. They will also, unlike SSI, workability will not count IRA benefits, 401ks. Like SSI, they won't count the value of a home or vehicle as well. Now, you were supposed to, if you were making if you were under 150% of the federal poverty level, no premium. But if you were making over that, they were supposed to charge you a $25 a month premium, which, by the way, if they ever institute that, it's still worthwhile. Your Medicare premiums are over $100, and Medicaid would pay your Medicare premium, so you wouldn't be paying them. You'd rather pay $25 anyway than you would for the over $100 premiums that the Medicare program has. So they still would be worthwhile, and you know yourself, if you had to pay out of pocket for any of your medications, it's going to be probably a lot more than $25 a month, so it still would be worthwhile. However, they do not have enough people enrolled in this particular Workability Medicaid program to justify billing costs yet. So no one, no matter how much they're making, is paying a $25 a month premium. That 150% of the federal poverty level is about $1,600, so about where you're going to be topping out of a full SSI check for a single individual, and then it goes up for people who have more than one member in their household. Okay, so that's workability. It's the best Medicaid, the widest door into the Medicaid program that you can get. If you have Medicare, it'll, as I mentioned, it'll cover your Medicare premiums, so you won't have that taken out of your SSDI check. If you do have an SSDI check, you should go down to apply at your local County Board of Social Service office. It should take around 35 days to make a determination, but that's based on whether or not you've given them enough information. If you arrive and you don't have all the information that they're requiring and they send you home for it, obviously that's going to add to the time that it takes to make you eligible. There are counties that actually do somewhat best that figure, and maybe even you can get it in a month. But so you should have as much detailed information ready for them when you go down to meet with them at the County Board of Social Service office. So that is the end of SSI and Workability Medicaid. So Melanie, I will take questions now.
Thanks so much, Greg. So the first question we have is regarding child support and if it is considered unearned income.
Child support, if the child is in school, they will be counting, they can only count 2/3 of that as unearned income against the SSI check. Once the child is out of school, however, they can count all of it. Okay?
Thanks so much. The next question is a job coach an impairment-related work expense?
Only if you're paying for that job coach. If someone else is paying for it, no. So it's an out-of-pocket expense. And some people do pay for their own job coaches, but I think that's fairly rare.
Perfect. And we also have a couple more questions. Again, we're going to try to get to as many as we can, but I don't want to hold you up from the rest of your presentation. So I'm going to give you one more for right now.
Sure.
Would you consider or recommend a third-party trust?
I would recommend, in terms of covering, say you had an inheritance for your child, and that, of course, would be something that SSI would count. You would want to do get a special needs trust account drawn up. You would need a special needs account, a special needs trust lawyer, and preferably a good lawyer. There are good lawyers and there are bad lawyers. You want to get a lawyer who can make that account airtight. In other words, the government can't count any of that. There are different types of special needs trust accounts, and some of them are fluid. In other words, you can put money in after it's begun, and some of them are stagnant. Once you establish it, it's not touched until the requirements are met. So yeah, I would recommend if you have a large amount of money and you don't, it shouldn't be anything in that child's name is going to be counted. So if you have something that you want designated for that child, that you want to be able to give to that child for support maybe after you're deceased yourself, you're going to want a special needs trust account to cover it so that they're not going to count it.
Perfect. So Greg, just to give you a time frame, we have about a half hour left in the presentation. So if you want to move forward with your slides, we'll be collecting the questions. If we have time at the end, we'll get those addressed. And if we don't have time, we'll make sure to get in touch with the people that asked.
Okay, great. All right, so we're going to move on to Social Security Disability Insurance, SSDI. Social Security Disability Insurance is exactly what it says it is. It's an insurance program. It works the same way any other insurance program works. You have to pay a premium to get it. The way you pay your premium for this particular program is to work and have FICA tax taken out. That is, in effect, your premium. If you work long enough, you end up becoming eligible for this benefit, and as you're working, you'll get an annual statement, and it'll tell you if you became disabled today, this is the amount of money you would receive as an SSDI check. If you retired early based on this money, this is what you would get. If you retired at full retirement age based on this particular work history, this is what you would get. So SSDI requires a work history. If there is no work history, there is no SSDI account at all. Now, it doesn't have to be the beneficiary's work history. It could be a deceased or disabled parent's work history, as we already explained earlier. But somebody has had to do some work. So if you forget everything that I say about SSDI, remember this: only work creates it, only work can change, stop, or influence it. Okay? So that is going to be, or your relationship to work can change or stop this benefit. Okay? So that's, SSDI is more cut and dry. Either you're eligible for the entire check or you're not eligible for any of your check. There's no easy off with the SSDI program. Okay, it doesn't have a resource limit, so they don't care about what you have in the bank or anything, or your possessions. It doesn't have, it doesn't count unearned income at all. The only kind of unearned income that matters a little bit is workers' comp, but it will not make you ineligible for SSDI. Okay, it'll only shave off a little bit of your SSDI check for the duration of the workers' compensation. Once your workers' compensation is done, then your check will go up to the full benefit check. Okay, if you have children and you're the one who's the SSDI recipient, your children up to the age of 18 will receive a portion of the check. As they age out, that child's portion will go to the remaining children, and then that's done. That's called a full family benefit. If the child is disabled once they turn before the age of 18, then they can become eligible. They can keep their eligibility for their SSDI portion as adults. Okay, so for those of you who are wondering about that, you may get a letter about the time the child is about to turn 18 saying, look, this SSDI check for so-and-so, Johnny or Mary, is going to go away unless you can prove that your child has a documentable disability. Okay, so they're going to make you go through that process to get it. Now, SSDI comes with Medicare after 2 years unless you have a renal failure condition or one of 50 different compassionate allowances, which are basically cancer conditions. The reason for, and if you're in those categories, you get your Medicare immediately, and the reason for that is you might not live long 2 years. Okay, so they want to make sure you get your Medicare before you pass away. That's why they put those, call those compassionate allowances and renal failures the same situation. So other than that, you have to wait 2 years for your SSDI Medicare your Medicare account to come up. Okay. Now, so we already talked about work being the most important thing. So they're only going to count earnings, and they're going to count it this way. If you're an SSDI recipient and you're looking at your pay stub, you're going to be looking at your pay period beginning and ending dates, not necessarily the pay date, because they're going to go by when you did the work, not when you got the money, when you got paid for the work. So, for instance, if I were a realtor and it took me 4 months to sell a house, and then I got paid in the 4th month, I would want to make sure that SSA knew that it took me four months of work to get that paycheck. So I'm going to have to show them when the work was done so that they don't count it all in 1 month. Okay. So it's different than SSI. They're going to count their your gross earnings when the work was done. Okay, because you might do 2 weeks worth of work last month that you didn't get paid for until this month. So they're going to, in SSDI, they're going to count those 2 weeks towards last month. For SSI, they're going to count it towards the month you got paid in. Okay. Now, for SSDI, they're going to take that gross earnings figure and take out the first of 2 measuring sticks, and that is called the trial work amount. The trial work amount indexes up with the cost of living each year. The only time it didn't, again, was during the financial crisis. It's back to indexing up. It's now $770 gross a month. Now, that means this. If your son or daughter or the person you're working with is earning under $770, they're still flying under the radar. They're not going to accumulate a trial work month. If they're only going to accumulate a trial work month when they're making $770 or more, and that or more figure is anything. You could be making any kind of money, and as long as it's, all they're going to do is make sure that it's at or above that figure or not. So you could be making $2,000 a month. The only thing that should happen during that month, your check will not be in danger. You'll only accumulate a trial work month. So trial work months are not necessarily consecutive. They are cumulative, so you will only collect one when you're at or above that figure. Okay, and you have to be careful because sometimes I've seen Social Security make mistakes with that. And it's a very basic mistake, so you can never assume that that they're going to do it correctly, and you must watch that. They should only count it as a trial work month if it's hitting the trial work figure or more. If you're reporting work from prior years, they're going to go by the figure for that year, so you cannot, they won't grandfather you into the higher figure. Okay? Now, the 80 hours that you see down there on that one note page concerns people who are working for themselves. So if you're self-employed and say you're not making a net profit, they're going to count your net profit as a self-employed person, and say you're not making $770 or more in net profit. So they're going to ask you the second question. They're going to say, how much time are you putting into your business each month? And if you say 80 or more hours, which is basically full-time work, they're going to count that as a trial work month. Okay, so that's what that 80 hours figure there. That 60-month rolling window, Tad, means this. If I hadn't reached my 9th countable trial work month, by the time the 5th year rolled on, some of them that I had, they would start to roll off the back end. I've worked with people that have amassed 8 months of trial work, but then 5 years, all of them aged out of that 60-month rolling window. That's a period of 5 years. And they were able to start with a whole new 9 months because all of the previous months had rolled out before they accumulated that 9th one. Okay, so that's a 60-month rolling window. So to sum it all up, your trial work period is different for everyone. And it is that period of time that it takes you to accumulate a maximum count of total of 9 countable trial work months within a 5-year rolling window. Okay? Some people never get through their trial work period. Some people take years to get through their trial work period. And some people go through in 9 straight months. So it's really all according to what you're earning. Okay? Once you've accumulated your 9 trial, these are the old trial work month amounts. Again, they're indexing up each year. Once you've accumulated your 9th countable trial work month, the very next month, they'll put you in a new period of time that they're going to call the extended period of eligibility. And the extended period of eligibility is basically 36 consecutive months. Okay, so now we're not going to count them cumulatively, we're going to count them consecutively. So once that calendar starts, they're going to page those months down, can write one after the other, whether or not you're even working still. Okay, so they're going to count them off. Now during this 36-month time frame, they're going to take out the second measuring stick, which is called the SGA. And the SGA is substantial gainful activity, and it is set at $1070 gross a month that as we said before. If you're earning under that, you're still under the radar, and you're still eligible for your entire check and your Medicare coverage. The first time you hit that figure or more, you're going to end up kicking in a 3-month grace period. They will call it a cessation month and 2 grace period months, but it's basically 3 months where you're still getting a check, no matter what you're making at that point. Okay? After those 3 grace period months are done, if you're still at or above SGA, that would be the first month you're ineligible for a check. However, if you go back under SGA after that point and inform Social Security, then you can get your check back. Now, the truth of the matter is it takes them a lot longer to catch up with SSDI information, so you may be getting checks you're ineligible for, maybe even for a period of years. I think that the highest overpayment amount I've heard was $101,000. So that's a lot of overpayment that, and you don't want to have that happen without really being prepared for that. And I'll show you how you can do that. So after your grace period, if it happens, you could seesaw with your check eligibility between being eligible and not. Now, because that's true, they will allow you, these are the old SGA amounts, and there is a blind amount of $1,800 gross this year a month. Okay? Which is why you don't have a blind work expense. You can only use impairment-related work expenses. Now, if I were a person who is blind, I could use an IRWI because they will allow that in addition to using my blind SGA. Now, IRWIs with SSDI people are counted entirely. Okay, so you can count the full value of an impairment-related work expense as an SSDI recipient. So if I have a $200 out-of-pocket expense, they're going to subtract that entire $200 from your countable earnings figure and only count what remains. So therefore, if I thought I was going to be in danger of losing, hitting SGA, I could, and I had out-of-pocket expenses that related to my disability, I could have Social Security inform them of that, and they would start to subtract out whatever those impairment-related work expenses were, and that might be keeping me under SGA. Social Security understands that it might cost a person with a disability more to go to work than an average person, and they want to incentivize work, so they're going to make a way for someone not to have to count that out-of-pocket money, and this is an impairment-related work expense. So that's one way that you can stay under SGA. You can actually literally make over SGA, but be considered under, okay? The other way is called a subsidy arrangement. Now, there are 4 basic subsidy arrangements. Subsidies are goods or services that other people pay for that I can get credit for as a discount, Okay? Four basic ones are employer wage subsidy, employer accommodation subsidy, agency job coach subsidy, and an agency job sampling wage subsidy. Now, the employer wage subsidy, subsidies are far more common, by the way, than impairment-related work expenses. Okay, and they can be worth a lot more. I've seen people with 40% subsidies, so almost half the person's wages are not being counted by Social Security. That allows the individual to make that much more over SGA. I don't know if you can tell, but I'm really cold in this room. So, anyway, the employer wage subsidy works this way. If you're going to work, and you are allowed to take more time to perform your job, or take extra breaks, or not perform certain portions of your job, you have an employer wage subsidy. Now, we can help with this, and we would be drafting the letter to get this established. But so basically, those particular situations can be quantified in monetary terms by the employer, and we again would assist with that. And that portion would be taken off of what Social Security is counting. Let me give an example. If I was hired by Wegmans Food Store as a cashier, I use Wegmans because they're very accommodating with people with disabilities. They do a great job with them. Say I was hired as a cashier, I was started at the same rate as every other cashier, but say I was a wheelchair user, and during slow periods they allowed me not to have to return straight items to the lot, to the shelves, return straight carts to the lot, or spill up the the spills on aisle 13. And say they would, we could arrive at a value of each of those is worth about $2 an hour. That means that basically every hour, $6, they're subsidizing me for $6 an hour, okay, because I'm not performing each of those functions that they put a monetary value of $2 on. So I would multiply the number of hours I work per month by that $6, and that would come off of what Social Security is counting on my gross wages. If I had also that $200 impairment-related work expense, they would sandwich all that together and take a percentage off. All of it would come off of what they would count of my gross wages. You can only use this once you start your extended period. They don't allow it during the trial work period because you're never in danger of losing your check. Okay, so that we would help with. We could draft the letter. We would talk with the employer and negotiate the sum of the subsidy, and then we would draft the letter and have the employer sign that letter and have it taken down to Social Security to establish the subsidy. The employer accommodation subsidy would exist where the employer is paying for something that would assist me because of my disability to be able to perform the work. So if I was a person in a wheelchair and Wegmans put in a ramp and lowered the cash register booth so that I could access the work, and it cost Wegmans $4,000 to do that, I could take that one-time cost out of 1 month of countable wages, or I could have it prorated out over several months of countable wages, and Social Security would allow that. So anytime there's a one-time cost, but it's large enough, they will allow you to divide it over several months' time. Okay? So that's an employer accommodation subsidy. If I still needed a job coach by the time I reached my extended period, I could take the number of hours the coach worked with me per month and multiply it by my hourly wage, not the job coach's hourly wage. So it has to be the beneficiary's hourly wage multiplied by the number of hours the job coach works with the beneficiary per month. Okay, and that would come off. The way you would prove that is to get a physician to say that you absolutely need a job coach, and you would get the proof from the coaching agency as to how many hours that person is coaching you. It doesn't need to be on the job site. It can be that they're coaching you off the job site and kind of counseling you to help you through some issues on a regular basis. Now, the fourth and last subsidy would be an agency job sampling subsidy. if there's an OJT involved, like the state of New Jersey is paying half the wages for half the year, whatever the state or whatever other entity is paying as an incentive to the employer to hire you should not be counted by Social Security. Okay? Now, all of these, you cannot depend on Social Security to recognize these. They don't have the time to go into this kind of detail to apply these. Sometimes they will send out questionnaires designed to find out whether you have IRWs or subsidies, but they don't always send those out, and they'll send them out without explaining to you why they're asking you these questions. So you may not answer them correctly, and you may miss out on IRWs and subsidies that are available to you to have Social Security come up with a countable earnings figure rather than counting your entire gross and allowing you to stay under SGA. Okay, so those are subsidies. Subsidies for self-employment. In addition to my regular business expenses, I could take out the cost of unpaid help. So if my Uncle Bob was doing my bookkeeping but not charging me for that, I could have him itemize what he'd normally charge, and that could come off in addition to my real business expenses. An unincurred business expense would be, say, my Aunt Linda bought me a van for my business. I didn't pay for it, she did, but I can take the cost of what she paid for it out in addition to my regular business expenses. So those are for those who are self-employed. Now, what happens when you get to month 36? Because I told you you're gonna come to that in 36 straight months, all right? So let's see. In month 36, if I'm at or above SGA, maybe I was before then, but I still am in month 36, that would make month 36 my last possible eligibility month, and 37 my first ineligible month, okay, a month during which I'm not going to be eligible for my check, okay? However, if I'm under SGA in month 36 and I continue to be under SGA consecutively thereafter, 37, 38, 39, and so on, I get to keep my check eligibility outside that 36-month box until such time as I hit SGA. Now, I may, and that's whether or not I'm making under SGA or I have IRWs and subsidies keeping me under SGA, they're counting it the same way. So no matter how I'm staying under SGA, if I am under SGA in month 36, and consecutively beyond there, I extend the life of my check for the entire time that I remain under SGA. Okay? Now, so if I finally, however, say in month 70 I arbitrarily finally hit SGA, then month 70 would be my first ineligible month. However, if I hadn't used my 3-month grace period, if I hadn't hit my cessation month, they would award me my cessation month there. So I would have that and 2 more months of checks. So 3 grace period months outside the 36-month box they would allow me there. So that would be 70, 71, 72. That would make 73 my first post-check eligibility month. Okay? At whichever point I finally hit SGA, either at month 36 or sometime thereafter, from that point on is when my post-check eligibility period starts. And that's a period of 60 months during which I remain eligible for Medicare. By the way, even if I'm ineligible for my check during the 36 months, I remain eligible for Medicare. That doesn't go away. And during this 5-year after period, I remain eligible for Medicare. It's called extended Medicare. And while I'm still eligible for my Medicare, I'm eligible to apply for expedited reinstatement of benefits. What expedited reinstatement of benefits means is this. If during that 5-year after period, whenever it begins, when I'm still eligible for my Medicare benefit, I begin to make under SGA again, and that's because of my disability, and it has to be because of my disability. It cannot be because I was laid off with everybody else or my company moved out of town, or even if the job doesn't exist anymore. They won't allow anything other than your disability to be the cause. So as long as your disability caused you to make under SGA again, I could apply for expedited reinstatement of benefits. As soon as I applied, they would start sending my check to me again, but they would call it a provisional check because they're providing that check for me while they're looking into my case to see if they're going to put me back on. They'll give me up to 6 of those provisional checks. So it'll take them at least a half year to figure that out, probably. If it takes them any more than 6 months to figure that out, they're not going to send me any more provisional checks until they decide whether they want to put me back on. If they do decide not to put me back on, more than likely I would not have to pay any of those provisional checks back as long as I could prove that I could not, that it was a hardship for me. If, however, they put me back on, then starting with the first of those provisional checks they sent me, they would count out 24 months of checks, but this time non-consecutively, meaning when I'm under SGA, I'm eligible for the check. When I'm not, it's still banked there for me until I am. Okay, when I use up all 24 months of checks, the whole ball game starts again. They'll give me a new 9 months trial work period, a new 36-month extended period of eligibility, and a new 60 months of continued Medicare coverage and eligibility to apply for expedited reinstatement of benefits. And people have gotten back on through that method as well. So you have quite a bit of rope before you're completely done with your SSDI. And unless you know about it, you might miss out on that. Now, I know that's a lot of information, but that's why, if you have questions, I'll be glad to answer them. But also, you can come to contact New Jersey WINS, and we can work with you individually, with you and your child, or if you're a professional and you're caring for people who are on disability benefits of one kind or another. We can help you individually with those folks as well. It's a free program, NJ WINS is, so we can help you beyond just this training tonight. I don't think I'm going to have enough time to cover Ticket to Work, but I will take a few questions before we're done here. If you still have questions that we haven't gotten to, I invite you to write them in. I can answer them by email or what have you. Okay, Melanie, any questions?
Greg, we do have a lot of questions. The first one is, my disabled son works part-time for the last 7 years and brings home $30 a week. Should he apply for SSI or SSDI?
Well, I mean, if he probably would just be, you could, it's one application, we'll put it that way. I would apply online because that will give you a protected filing date, and they will, if he's eligible for SSI, which I'm thinking that's the benefit he's going to be eligible for, if he's making that little money, it's probably not going to be enough to become eligible for SSDI yet, and it takes about 10 years to do that. So I would think that he's going to end up with an SSI check. He might be he can get the full benefit or the third reduced, but I'm pretty sure he'll end up with an SSI check.
Okay, the next question is, can a disabled child of a living parent on Social Security receive SSDI?
Yes, either they've worked enough to establish their own SSDI account, and that happens after years of work. You know, if you've been working for an extended period of time and you might have started out as an SSI recipient, you may become eligible for your own SSDI as a worker yourself, or if a parent becomes disabled themselves or God forbid deceased, they were working, their account would fall to their could be accessed by the disabled child as long as they were disabled before adulthood.
Okay, and how do you report self-employment income when you are reporting wages to Social Security?
Self-employment income, again, they're going to be looking at the net income, and if you're an SSDI recipient, they're going to be looking at the number of hours worked if it's not enough profit to hit that 770 figure. So you would be wanting to show them by a 1099 or show them the bookkeeping where you've taken out your business expenses to get to that net profit. You're going to want to show them how you arrived at that, and they will be able to, that's the way you would do it.
Okay, we have a couple more questions and I'm going to give before our time runs out. Is there a way for my disabled son to get Medicare instead of Medicaid?
Yes, there is, but that would be attached to your SSDI. So unless someone is eligible for an SSDI account, they're not going to end up with a Medicare benefit.
Okay, and the last question. A fully disabled child goes from SSI to SSDI when a parent goes on Social Security. The child now gets SSDI from parent's Social Security account. This check could cover the SGA amount. Will this child lose Medicaid waiverable services such as day program, personal care assistant, or respite provider?
Okay, we're talking about two different things. All right. If what we're talking about is the SGA is earnings only. That's so, and SSDI is unearned income. Now, the SSDI might be enough unearned income to knock out the entire SSI check, in which case they would be a DAC beneficiary and be able to loophole into keeping their Medicaid through that. Okay, but again, SGA refers to earned income, not unearned income.
Perfect. So on behalf of myself, Laura Hurley, and Greg Makeley, along with the Family Support Center of New Jersey, I would like to thank you for joining us this evening. We hope that you're going to share in our next transition webinar titled Healthy Transitions that will be presented on March 25th. And please remember to explore the Transition Matters website at transitionmattersnj.org for archived webinars, upcoming trainings, and resources to successfully transition your child with special needs to adulthood. Have a wonderful night, and thank you again for joining us. Thanks again, Greg.